Okay, this is timing strategies for Thursday, July the 17th, client blog update. This is again for client use, for communication and update purposes as a blog site. If you're a member of the public, not a client, and you have any questions you come upon this, please feel free to give us a call or an email. This is by no means any recommendation to buy nor sell or take any investment in any securities whatsoever. That said, let's get down to business. Today, we took a piece of our long position off. We were long 65%. 20% of that 65 was in the GDX, so let's exclude that. So we were long 45% in the indices, including the XLF or the financial sectors. We took those all down by half today. So effectively, we're long in the S&P by 15%. And we're long in the S&P in the basket of the indices, and we're long in the financials by another 5%. So that gives us a 20% total exposure. The reason why we took that off is because, exactly like we said in our last update, was that 126 half level was our first test. Got tested, didn't close above it, got a little bit rejected. So staying true to form, that's what that X means right there. Is we took part of that risk off, and then we'll see what happens. Two scenarios that could unfold. Oh, by the way, we also got long today in the oil and oil services in the RIDEX account. We were looking for that point yesterday. This is the XLE. This is just an easy way to look at it. So we got long in the oil services and the energy sectors in the RIDEX funds today by the tune of about 10%, 8 to 10%. I don't know exactly well. I think it's about 8 to 10%. But let's go back to the S&P because that's where we're really kind of doing this focus more on. Two scenarios that we have potential for. Well, there ain't a lot of scenarios, but what we're looking for. Why didn't we get short? Yes, we are bearish. Looking for further sell-off, but I am looking for to get short heavily. I'd like to see a takeout of this high. Once we get a takeout of that high, we got a clear sign to start looking to get short. Not that we're going to go short right away, but if that happens, we'll hold the last of our long position to a point where we do start to put on a short spot. One scenario is if the market heads up, then we'll probably take off the last of our long positions depending on how high and where it goes. Next case scenario, what if in the next couple of days, instead of heading up, the market does something like this and heads lower. If we wipe out the lows of today and we wipe out the lows of Tuesday, we've got another long position that we're looking to get long at down here at about 11,750 or 1175 on the S&P to 1165. That'd come in at about 117.50 to 116.50 on the spiders. So bottom line, if we trade down, wipe out those lows of Tuesday, in the next couple of days, it can't drip like this. It's got to happen fast. It's got to catch everybody off guard. Then we will be a buyer down there. If we instead keep heading higher, we get a move that takes us above today's highs. We'll hold that long position to a point where we seem enough of our signals to confirm to get short. We'll start scaling into our short position, maybe 20 to 40% at this level. And again, anything can happen. Real quick, let's look at the financials XLF. Yeah, well, everybody knows what's going on there. The SEC, the government, they love it when they go up, and they like free markets, right, Larry? Free market capitalism? But, when things go down, we got to make these regulations, and we got to take taxpayer dollars, and we got to call Goldman Sachs to make sure that it's a one-way street. That's not free market capitalism. That's crony capitalism. That's communist capitalism, whatever you want to call it. Bottom line, XLF in the banking sector did real well today. I want to punch in the actual banking sector because we are getting end-of-day prices instead of aftermarket prices like that bar showed. Today, banking sector, beautiful move. And we have, like I said, a 20% position in that still. Or no, excuse me, what do we have? 15% in that. That and the financials. So we took half of that off today also. Again, using the XLE, we actually spread. We reduced our exposure in the banking sector, and we actually started buying a little oil today using the RIDEX Energy and Energy Services Fund. We're going to scale into that if we go any lower down to our level on the XLE of 69. Right now we're just going to hold that position. It's about 8 to 10%. Let's take a look at the GDX. Kind of getting beat a little bit, but we're holding that on a precious metals basis, the Ridex Precious Metals Fund from back here on the 25th or 26th. Compare that to the gold, GLD. One of them's a liar. The actual metal itself is holding, where the papers, the XAU, let's use the XAU because that's probably what everybody knows. You know, XAU is kind of limping along here and kind of actually showing some weakness versus the actual metal. Who knows who's going to win? I don't know, but I'm in the camp that if we're in deflation, metal's going lower, GLD's going lower. If we're in the hyperinflation or just the money printing, reckless type of environment that we've seen, which gives us no reason to think otherwise, the Alan Green skunk and Hank Paulson type environment, probabilities are the metal will go higher, and the paper stocks, the precious metal stocks, will probably have to play catch up. Other than that, if you have any questions, please give us a call or an email. And again, back to the mainstay. What we get based on the markets over the next couple of days is they'll determine what we're going to do. And last point I want to make on the Qs. New symbol Q, 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 Q. Everybody likes Qs. Where's our buy point for the Qs? Right down here. If the Qs get down to 43, trade there, but don't close below that point, but we get kind of a little more of a spike bar down here, then we'll be buying the Qs also probably a little more aggressively. So please give us a call, and until our next update, I wish you all well.